Hello, today is the 16th of August, end of week report. And let's switch to the secondary indicators right now. So the first thing I wanted to point out is actually not the sentiment, but improving breadth. This is a good sign, and at this point it's quite obvious that we're having a very well-defined attempt on a V-shaped recovery, so-called, so to speak. These recoveries are not the typical behavior of the markets. They are statistically a bit more rare, not like the your typical bear market, which tends to happen in several iterations and has few legs to the downside. And what we're seeing right now, the most important thing is that not only mega caps are rallying back, but this indication of stocks above their 50-day average, 50-day moving average, is improving too. And for the first time in 2 weeks, it's above the 50%, 55 at the moment actually. So this is a good reading, and in my opinion, this is a good argument in favor of a well-defined rally in the second half of this year, which also coincides well with seasonality. The presidential cycle in the States. So this is a good information, quite optimistic, I should say. What I don't like is that sentiment seems to be improving in accordance with the AAII Investor Sentiment Survey, and it's a bit too fast. And this correction failed to produce a meaningful reduction in activity of retail money. So this is a bit of a problem for me personally. So, but when we go to CNN Fear and Greed Index, which is an aggregate of a few different ones, we see that actually at the level of stock prices, there is fear. Breadth, obviously, still fear, because we just saw the market breadth chart. Put and call options neutral. One of my favorite readings actually to define bottoms of corrections. I think we got. I didn't track it at the moment, but I think we came pretty closely to a reading which could define at least temporary bottom in the market. And also we have two readings that indicate extreme fear. So this we will transition to the charts now. This reading that shows us greed in the market momentum was localized in the quite isolated group, the group that was leading the market all the time. And it was the group, and still is, semiconductors, namely NVIDIA. So what we're seeing here now is a V-shaped recovery. So this is not a very good sign, because guys like NVIDIA and maybe also Microsoft, I don't know if it is holding well. Yeah, a bit similar, but quite weaker than NVIDIA. NVIDIA was with removing lots of liquidity from this market, and it still does its thing. But what has changed is right now we are seeing not so V-shaped, not so beautiful, still has some gaps to fill. But right now, IWM, which is an ETF for the small caps, and MDY are strong too. And these are the good news. And right now they are working in tandem with other indexes. So this is how the improving breadth of the market translates into actual stock movements. And of course, it's a bit too early to proclaim that it's time to go all in and just buy everything that is moving up. But we're also seeing some positive action here. What's important is that nothing has really disintegrated. Well, at least in my watch list. Some of them did shake out, but right now they are holding well and perhaps even setting up to climb a bit higher. So this is quite representative because I screen for the stocks which have the highest relative strength, and they are not there yet. And there are names that are holding up well. Among them, there are names which seem to be set up to follow through to the upside. But the liquidity is just not there yet. This is my conclusion for today. And you can sort of see it when we go through the broad list that I'm watching. You will see that there are some attempts to grow, but overall the patterns are a bit erratic, and that means that the price movements are not controlled by institutional investors, and this is where this reading of market sentiment being bullish at the moment. Actually, right now, this observation was true yesterday, but right now I'm seeing how they actually improve, and we see volatility, price volatility contracting on the right side in some names, so that could be a good sign. I think that sort of the lesson from this. I think that this correction is a bit more insidious because it is one of those movements in the market which teach traders and investors bad behavior, namely buying the dip. Many words were spoken about this training of buying the dip, until the moment when something changes, and we will eventually replay the story of Nifty 50 from the 70s. Companies like Kodak and other innovators of the second part of the 20th century in the States. Everybody thought that you could just buy the dip because they always go up. But every once in a while, it happens, quite rarely, of course, because especially these companies are immensely powerful. They buy out a lot of competitors. But right now we have, for example, OpenAI, which is a very formidable competitor to Google. Personally, I don't use Google anymore for finding information. Of course, I do so, but it happens very rare these days. I just go to ChatGPT or Claude. And I didn't verify it, but I heard that ChatGPT is about to start competing directly with Google. So this is why this price chart looks weak. Looks weak in comparison to QQQ, for example, or aforementioned NVIDIA, because everybody is going to need chips at the end of the day. So, of course, there are lots of companies. Not all of the mega caps are at risk right now, but what is happening and most likely what is about to happen in NVIDIA, I'm sorry, in Google, could be a very valid example of bad outcomes of buying the dips without stop losses. You can buy the dips with stop losses if you have a technique for that. It's no problem. But most of the people don't have stop losses. And this is how their problems arise. I think that's it for today. I'll be doing lots of screening during the weekend, especially if we will have a good close today for my initial watch list. And we'll see. Have a great weekend and let's be in touch.